welcome back. This is Forex Chronicles. So if you're new to this channel, please subscribe. So on this video, we're going to show you why we are using moving average, what's the importance, also if there's a disadvantage of using moving average. I'm also going to explain, but we are going to deal with the more advantage because every strategy has a little drawn back, but to this one it's very not much. So I'm going to start showing you using volatility 75 index. So this week we've been a very bear trend hardly until now. So there are a lot of crosses around the market. There's so many crosses around the market. There are so many crosses. You can see 13 and 50, 250. First, let me explain those moving average. The red one is 13, the blue is 50, the black is 200, the 800 is purple. So that's how I'm using. So normally I took entries when 50 crosses 13 or 13 crosses 50, and when I hold is because when the 200 or a higher moving average is above a lower. So that's how I normally do. So like we can go through this week and show you how I took trades on this pair, okay. We can start from here. Let me add something. So yeah, we can see example from here. As you can see, there's a lot of consolidation here around. How did I see this consolidation? Because the price was a like whisper up down around the moving average. It has touched this 1, 2, 3, 4. So all those touches, all those whisper ups and downs shows me consolidation. After this consolidation, price breakdown. Let me show you. Let me draw the box here so that you can see what am I talking about. So this, so around this box there was a consolidation around this box. So price breakdown, and because you are looking for we're looking for the candle that has been crossed by the 13 moving average as our entry for a sell. But here there are two moving average, the red and the blue. They're the ones which have been crossed before this break. As you can see, this cross is from the week, this is from the candle itself. This is a good one, but this candle has been crossed twice, with the one with the red 13 EMA and the blue moving average. So our entry was, I first see at this place, this from here to here. But why did I move from here to this candle? Because this moving average crossed the body. Here the moving average crossed the body of the candle and the wick, but this place it has crossed both. So two moving average crossed the same candles at the same place, not from the wick but from the body, as you can see here. So there was our place of entry. At the same time, this is a key level. From here to this week is a key level. So from here up to here up, this is a key level. So that is where we started putting our entries for sell. So we took that first entry and we broke this structure. We continue moving down. So also after breaking this structure here down, price retraced back. So when price was retracing back, you can see I took the entry around here. So this entry was from a higher time frame, that is 1 hour. Let me show you. That was from the 1 hour. As you can see, that's from the 1 hour. So from the 1 hour, price came and retraced on this candle that has been crossed by the red moving average on the body, not on the wick, as you can see this body and the candle, I mean the moving average crossed it, body, they crossed the body, so the body starts from here to here down. This moving average did not cross on this wick but on the board, so we took another entry. That was from higher time frame. So that was the first entry. The second entry, the third entry was around here, but I closed this entry already. It was you can say break even, but it didn't affect me much, so I went for a buy mode again. So procedures are the same, just have to wait for consolidation. So this was a consolidation around here, like, let me show you, like somewhere like 20 candlesticks were somewhere around here, as you can see there, 15, so we're 15. So after those 15 candles were in consolidation, price broke this area and went up. So this distance from this to this moving up, from the blue moving average to the 13 moving average, showed me that we are going for an uptrend, because it fanned out, it started to increase its size from here to here. That shows that price is going to for a consolidation and start to change the trend. So this sharp move upward, then the price was crossing already. So after that price crossed, I came to see this moving average that crossed this blue candle. It crossed the body, guys. The more entries that I take is when I see moving average crossing the body candle, not wick, not the candle wick, but the body candle, I mean the structure of the body, not the wick. So here was this was the entry I took here. So this is the one we are still holding, but I can show you the entry that we missed was this one. It's this here, because price came back here to retrace this place. As you can see, this place from here to here, we have no price that came up to fill this place. So this was our entry, and if the stop loss was somewhere like, it's a lot of pips in V75 here. Yes, so this, sometimes we can take entries when there's a full body candle. So if we go to, let's go to lower time frame, so you can see this properly. When you go to lower time frame, you will see guys, you will see this place. You can see this place here. You can see there's a cross of 50 and 13. So that was the entry. But to refine this entry well, you can see here, let me go back this, it's a little bit disturbing. Yeah, this. So price went down, there's a cross, as you can see here. This was our refined place, but our entry was somewhere around here for the second entry, but we didn't took this place, that price. So let me go continue showing you some other structures, or how moving average crosses price. So the first thing you have to know the structure of the market when moving average cross the body of the candle, the wick of the candle. When moving average start to expand or contract, observe the price when is in range mode and see how the moving average operates. So let me show you how to spot consolidation. You'll see the moving average moving up and down at the same place, very sharp like this. You can see moving average we are falling down, but the price went sharp up, came down, came up, came down, came up, and then still went down. So I normally use 13 moving average to show the consolidation. Another place where there's consolidation is like this, as you can see here. This is a very nice place. Moving average is going up, the price is moving up, down, up, down, but the moving average is at the same place. So this is the area of consolidation. Another thing to see is after consolidation, the break is done, you go look for the candle that is crossed by the moving average and you put your entry there. So let me go show you another. Sometimes I normally trade volatility 10 index. So let me show you. This pair was, when you check on other videos that I've done, we are holding this price. It was moving down. It was a bear trend, so I didn't take the buy trend. I didn't take the buy trend for that reason. I went for V75 because I see most of the structures were happening there. But when we come to analyze this, why there was this uptrend, is this is the same reason, as you can see. For the same reason, price or the moving average the space between was increasing. That shows we are going for an uptrend or changing the trend. So if it is an uptrend, you could see the moving average start to giving space. So here the space from here start to alert me that we are going for a change in trend. That was the first thing. The second is after this cross. So after this cross, because here there was a consolidation here around here, this is a consolidation, price breaked up again, breaked up, so it come and retrace on the same place, that is around here. So their moving average that this has crossed these two candles on the body, guys, on the body. As you can see, this is the body. So it's either you put the entry here or below this, because this is where the moving average crossed the candles here on the body. So here was this was the entry for holding this price to go up. So you could come and see this, another one. If this price was still moving up, so a bit of consolidation, so it's either come and do a reset from here to here. But before coming from this price to this moving average, the 200, price has left this stuff here around. As you can see, this red moving average has crossed a gap. You can see here, guys, there's a gap here. There's a gap here. There's a gap here. There's a gap here. So let's go to lower time frame and check. So we're expecting some pullback, a pullback that is around this place. This place, somewhere around here. So due to this breakdown, price is going to retrace on this place due to this cross. So this is just a consolidation around, like I told you before. Price moving in a whisper mode, like it is up and down on the same moving average thoroughly. You can see the moving average is falling down, but the price is hitting it several times up, down. This is a consolidation. So once this place is broken from here, this place is a consolidation. So when price is coming back, our entry, you can see there's a first key level somewhere around here. So expect around this price here 68.56.65, around here up to this place, where here inside is, if you go to lower time frame, there's entries there. You can see entries for price to keep moving down. So that's how we did, guys. That's how we did. So I'm still holding this price up to now. So as you know, why we are using moving average, it's because it shows the future of the price, where the price came from and where the price is going, where the price is going to do consolidation. Why consolidation? Where exactly is it going to hit from that consolidation? Because everybody is seeing the consolidation, but to know the exact point where the price is going to do the retest, the bounce, so to avoid manipulation or stop hunt, it is. And one thing I love about moving average on indices, it's when a long term crosses a short term, it's either a bullish or a bearish. That bearish or bullish is going to be very strong, as you can see from this. As you can see from this pair, here was the last cross of this 1350, 800 and black, and the 200. Since this cross was from the 3rd of January up to now, this pair is falling down. So the golden cross is when all moving average cross at the same point together. There you have to, either if you're buying or selling, you increase your lot size, or if you are selling, you increase your lot size. That's how it is. So on the next video, I'll show you to spot M structures and W structures, because there are so many M structures in the market and the W structures in the market. M, like this one, this is a W structure. Using moving average, it's easy to see, but how are you going to confirm that this is a M structure that is going to buy? Example of this, you can see price went down, came up, went down, came up. So that's a W structure of buying. But there are things that you should see when this structure happens. There's one more co-influence that you're going to look, and you go for a buy. On the next video, I'll show you guys, don't worry. Thank you for watching. If you haven't subscribe please, because there are more content to come. And happy new year, guys, and I love you so much. Welcome.